One Bitcoin for $1.5 million in 2030 is what Cathie Wood said on January 11th on CNBC, just a few hours after the approval of the spot Bitcoin ETF in the US. We believe that the probability of our prediction has significantly increased with this, as the SEC approval is the green light we were waiting for. Here are her own words. According to her, the significant increase in global hash rate, the amount of illiquid Bitcoin, and the evolution of active users on the network show that the technology perfectly follows the footsteps of other disruptive technologies, and the value of Bitcoin should explode in the coming years. Even though it's a very complicated metric to determine, it is estimated that there are as many Bitcoin users today as there were internet users just before the 2000s. So, one Bitcoin at over $1 million before the next decade. Absurd or possible? Stay with us until the end of the video. You will understand who Cathie Wood is and why her prediction may not be as absurd as it seems. Cathie Wood was born on November 26, 1955, in Los Angeles, to a family of Irish immigrants with a military father. She received a religious education and earned her bachelor's degree in 1974. 3 years later, she graduated in economics and finance from the University of Southern California, with a very special mention given to the top 1% of graduates. After her studies, Cathie began her financial career at the Capital Group, one of the world's 3 largest pension funds. She stayed there for 3 years, and then moved in 1980 to start her adventure in New York at Janison Associates, a Wall Street investment firm managing over $175 billion. She would remain there for 18 years. In 2001, she took her career to the next level by joining AllianceBernstein, another investment fund, but managing almost $800 billion this time. She became Chief Investment Officer, and that's when Cathie Wood's style is growing and starting to make waves on Wall Street. She is a risk-taker who favors high returns despite the associated risks. For her, the most important thing is the expectation of gross gain. The approach garnered her many criticisms during the 2008 financial crisis, as the funds she had responsibility for performed even worse than benchmarks. But Cathie Wood persevered and signaled that she is convinced her strategy is the best for the long term. Unfortunately, Peter Krause, the president and CEO of AllianceBernstein at the time, didn't see things the same way. Cathie Wood left the fund in 2013 and created ARK Invest a few months later, this time taking the lead and finally having the freedom to implement her own investment strategy. Investing is defined as radically different from what investors may find in the market, where we exclusively invest in disruptive innovations. Here is her mantra. Different from other investment funds that usually focus on analyzing the past to identify companies with short and medium-term yield prospects. She guides her studies toward the future in search of what could be the next big thing. This reminds me of one of Charles Gaff's recent videos on his channel, The Institute of Freedoms, where he explains the 2 sources of economic growth. On one hand, there is what we call Ricardian growth. This is based on the law of comparative advantage. Basically, it's an optimization of processes and markets through specialization. If a country, for example, is more efficient or competent in producing a certain good or service compared to another, then it should focus on that sector. You gradually end up with car factories in Germany and hotels for tourists in Spain. It's very simplified. So, this is Ricardian growth, an increase in productivity through specialization and optimization of marginal processes. On the other hand, you have Schumpeterian growth, based on the works of Joseph Schumpeter. Here, everything is based on innovation and entrepreneurship, an economic phenomenon that this economist explained. It's simple. As the world evolves, there are inventions and innovations that arise out of nowhere and question everything. This is what Joseph Schumpeter did, destroying entire sectors of the economy to allow other companies to emerge. This is how we can see Schumpeterian growth. The advent of the automobile, for example, in a few decades, radically disrupted the entire horse and carriage-related sector. leading to the almost complete disappearance of actors associated with that old technology. And this is what Cathie Wood is betting on, putting everything on Schumpeter. The investment thesis is simple. Identify disruptive innovations and the companies that use them best. According to ARK Invest, for an innovation to be considered disruptive, it should enable three things: drastically reduce intersectoral costs, and finally serve as the basis for the emergence of new innovations. In other words, disruptive innovation should profoundly change our lifestyles and ways of working. ARK Invest is, for example, very interested in technologies related to human genome sequencing, energy storage, AI-driven robotics, 3D printing, space exploration, and not least, blockchain and fintech. There is no focus on Apple, Amazon, Google, or Microsoft, but rather on Zoom, Tesla, Coinbase, Robinhood, or BlockFi. Define it as innovations of separation, but they simply believe that the potential for returns is no longer sufficient. Although these companies have proven themselves so far, the trees don't grow to the sky. So, you have to look for returns elsewhere in companies that haven't exploded yet, as we said a little earlier. Cathie Wood's investment strategy is unique and has already gained criticism. She diverges deeply from the rest of the players with more classic strategies. One of her most well-known bets that solidified her reputation and explains her exceptional performance is her recent year's investment in Tesla at $15 in 2016, when almost no one was talking about Tesla stocks. It is worth almost $200 today. If you trusted her since the creation of her investment fund in 2014, putting, for example, $10,000 in her 3 ETFs at the top of the last bull run, you'd have $30,000 worth about $250,000. That's a performance of 830%. In contrast, ARK Invest's approach is even more vulnerable to the market reversal from the top of the bubble in February 2020, a cumulative drop of 65% for these ETFs. But, as we repeat many times in our videos, volatility is the price to pay for performance. You can't expect to achieve significant multiples without a little shake. That would be too easy. In summary, I think you're starting to understand Cathie Wood's character. Strong conviction, obsessed with new technologies and applications that result from them, planning for the long term without being impressed by the extreme stock price volatility. She claims that Cathie Wood has the perfect profile to be a Bitcoin hodler. When you dig a bit to discover the relationship between Cathie and ARK Invest with Bitcoin, you realize it's a subject that has concerned them for many years. For the first research article she publishes on her site linked with Satoshi Nakamoto's invention date of 2015, the paper deals with protecting the network by miners and the specific issues of this matter. Reading it, we realize that their understanding of mining and network operation is excellent. They insist on the importance of geographical decentralization of miners to maintain network resilience and also address the issue of transaction fees that should lead to the relay of subsidiary blocks in the long run. They express a critical opinion on the matter, even allowing themselves to make a proposal for improving Bitcoin. Proposal in some way to solve the problem of the 1.2% basic fee on all Bitcoin transactions to sufficiently encourage miners to protect the network. They published a new article in 2017, this time discussing the uniqueness of Bitcoin as a financial asset. According to them, it is absolutely necessary to define a new framework to grasp the Bitcoin asset and allow the local implementation of specific regulation for this unique object. We believe that the volatility jargon is a malicious technique. Prices and sensationalist media have discouraged much of the general public from addressing what could be the greatest technological development of the entire internet. You can find on their website no less than 20 monthly reports, 19 published blogs, 17 episodes of their podcasts, 7 white papers, and 6 episodes of their public brainstorming, all dedicated to Bitcoin, its technology, its development prospects, but also its ecosystem and community. So, I understand that ARK Invest has been interested in Bitcoin for many years, not just as an asset, but especially for the technological object it is. In 2020, they published 2 new research articles that go even further. ARK explains how the technical characteristics of Bitcoin make its emergence in a financial world obvious. Based on trust, according to them, the fragility of the current financial system stems from a model based solely on centralized institutions. In the occurrence of central banks, commercial banks, and human payment processors create an unpredictable environment for economic activity. In this trust-based model, the integrity of an institution depends on those who control it. The rules imposed from the top down are guaranteed if those responsible for the processes are trustworthy. Decision-making is a matter of discretion for those who wield power. As institutions are gaining importance, entities that control them accumulate more power, potentially engaging in harmful behaviors. According to ARK, Bitcoin could completely change how a financial system distributes trust, eliminating the roles of various institutions relying on centralized authorities and thus creating an ecosystem based on IT and cryptography. In this article, they also mention the fact that Bitcoin allows you to regain control of your inheritance, a crucial feature in jurisdictions where property rights are not recognized or enforced. According to ARK, Bitcoin is the most robust tool in the asset protection spectrum, better than real estate, cash, or even gold. It is true that we truly understand the power of these new technologies when we take possession, removing intermediaries, and minimizing counterparty risks. Monongox, Bitcoin, IK Block, F, Celsius, FTX. History repeats itself cycle after cycle. If you're interested in taking control of your cryptocurrencies, we have a free training prepared to guide you and properly secure your cryptocurrencies. As explained earlier, the reason ARK Invest selects disruptive technologies that will change our way of life. And for them, Bitcoin perfectly fits that definition. Unlike some Wall Street players who consider Bitcoin primarily a highly volatile speculative asset, ARK Invest has been investing in it for several years because, according to them, it is truly a revolutionary technological invention. Satoshi Nakamoto allows a significant reduction in costs and presents applications that transcend sectors and serve as a basis for other innovations. In a podcast, Cathie explains that what initially attracted her to Bitcoin was the development of open source code. She explains that a technology developing in this organic way has a better success rate, but above all, a development pace superior to technology developed in a closed manner. And in an interview with CNBC after the approval of ETFs, Cathie states that Bitcoin is a public good. It is the zero layer of the internet. If you thought you were optimistic, Cathie, the Wall Street maximalist, is even more so than you. As she said at the beginning of the video, she sees Bitcoin above $1 million by 2030. According to her, Bitcoin is one of the most significant investments of our lives. If you want to understand why Satoshi Nakamoto's invention is not just to revolutionize money and finance, but also the entire electricity production and management sector, subscribe to the channel for more videos like this video, and see you next time.